Hey guys, welcome to Trading the Charts. My name is Rex and this is Tesla Weekly Analysis, episode 31 for week ending May 8, 2021. On Monday, Tesla was down 3.5%, closing at 684.90. It had a bearish breakdown below the consolidation zone of 700 and 775. It is once again trading indecisively as it jumps above and below the 50-day moving average and in and out of the orange downtrend channel. Not only that, but it is also bouncing in and out of the consolidation range as well. The breakdown below the consolidation range has me leaning more bearish on Tesla's stock price in the near term. It could be headed back down to retest the yellow trend line at around 655. In my opinion, if it falls to the yellow trend line, I also see it dipping further to retest the bottom of the green uptrend channel, which currently lies at around 635. On Tuesday, Tesla was down 1.7%, closing at 673.60. A rough day for Tesla as it once again broke downward into the orange channel. It found support as it retested the yellow trend line at its intraday lows at around 657. The indicators are also looking bearish as the MACD broke its uptrend. The RSI broke its uptrend already as well and seems to have made a lower high. Given the bearishness of the indicators and recent weakness in Tesla stock, I do see us potentially retesting the bottom of the green channel at around 635 before we recover. This 635 level is the absolute lowest we should go, otherwise the long-term uptrend going back to August 2020 will be in jeopardy. On Wednesday, Tesla was down 0.4%, closing at 670.94. It closed below the 50-day moving average for the second trading day in a row. The longer it stays below it, the more bearish the outlook will be. The 50-day moving average is acting as resistance once again as Tesla was rejected at this level at its intraday highs at 685. The support of the yellow trend line is still holding as support for Tesla for now. This trend line has been holding as support for 5 straight trading days now. As each day passes, it will eventually converge with the bottom of the green channel, which should be a solid support level going forward. On Thursday, Tesla was down 1.1%, closing at 663.54. The weakness continues as Tesla traded below the 50-day moving average for the third straight day. It tested the yellow trend line at its intraday lows at around 650. This 640 to 650 level is also where the bottom of the green channel converges at, so we might see Tesla sell off a tiny bit more before recovering. I presume that Tesla will find support at the bottom of the green channel and rebound from there. Another reason why I believe it will rebound from this level is because if we look at the weekly chart, you can see that this 640 to 650 level is also where the bottom of the channel shown here lies at, thus confirming a considerably strong support level. I personally would add more Tesla shares to my overall position at this 640 level if I had more cash on hand. Of course, this is not financial advice and just my personal opinion. Please always do your own research and due diligence prior to making any financial decisions. On Friday, Tesla was up 1.3%, closing at 672.37. Despite the green day, Tesla is still trading below the key level of the 50-day moving average, which currently lies at around 680. This marks the 4th straight day it has traded below this level. The yellow trend line has been holding as support the past 4 days as well. To the downside, the yellow trend line is converging with the bottom of the green channel at around 640, which as I mentioned before, should be a strong level of support for Tesla. A break below this level and it would break the long-term uptrend channel that Tesla has been trading within going back to August of last year. The next support level would come in at around 576, which is the 200-day moving average. To the upside, Tesla would need to break back above the 50-day moving average at around 680 in order for me to become bullish again. The 50-day moving average has been acting as resistance the last 4 trading days. The next level Tesla will need to break if it can get back above 680 is the 700 level. A break above that would bring it back within the consolidation zone between 700 and 775. It would be a very bullish indicator if Tesla could break out of consolidation at 775 and make a higher high. This would set it up for a trend reversal from the downtrend it has been trading in since April 14. So those are my price predictions for next week. Bull case, Tesla will first need to break above resistance at 680. The next resistance after that will come in at around 700. Finally, a break above this and Tesla could rally to the next key resistance level at 775. Bear case, we have solid support at around 640. Although I don't see Tesla falling below this level, if it happens to do so, we could see the next support level come in at around 576. Now, on to Tesla news. Miami's Mayor Suarez, Boring Company supporter, sees Tesla Robotaxi launched there in 2022. Elon Musk came up with the idea of creating a network of robotaxis that can drive, park, and connect to each other using Tesla's self-driving technology. To this end, the company plans to develop its own app in which customers can call a car or add their car to the network. It seems that the mayor of Miami agrees with the suggestion that the Tesla Robotaxi network could be launched here as early as 2022. Although Tesla's FSD will soon be ready, the approval process could take several years. For now, the technology will need to be used with a driver behind the wheel to meet regulatory requirements. This could be the beginning of wider adoption of the Tesla Robotaxi network, and it seems that some cities are already gearing up for this. Stephen Mark Ryan on Twitter hosted a poll to see when the first Tesla Robotaxi ride might take place. Thanks to Hassan Aesthetic on Twitter, Mayor of Miami City's Francis Suarez also took part in the poll, making it clear that the city is ready to launch Tesla Robotaxi in 2022. While the question was only about what the mayor thinks about launching the service in 2022, his answer lets us know that Suarez would be delighted to welcome the use of this technology in Miami. Tesla's demand is through the roof, already sold out this quarter. Tesla is currently seeing exceptionally strong demand for its vehicles as it is already sold out for the quarter, according to sources familiar with the matter. During Tesla's first quarter 2021 earnings conference call, CEO Elon Musk commented on strong demand for the automaker. We've seen a real shift in customer perception of electric vehicles, and our demand is the best we've ever seen. We're used to seeing a reduction in demand in the first quarter, and we saw an increase in demand that exceeded the normal seasonal reduction in demand in quarter one. This shift in demand is apparently extending into the second quarter. Sources familiar with the matter told Electric that Tesla communicated to employees that production capacity for the second quarter is already sold out, with still almost 2 months left in the quarter. That was to be expected for Model S and Model X, with the new versions of these vehicles having production delays that are going to limit deliveries this quarter. But Model 3 and Model Y are still ramping up, and yet they are sold out. The restart of Model S production and an increase in Model Y production in Shanghai and Fremont are expected to be the biggest contributors. And by the way, if you guys want to support the channel and get a free stock worth up to $221.50, be sure to use my referral link in the description below to sign up for Robinhood. Thanks for watching, guys. Please hit that thumbs up if you enjoyed the video and subscribe for more content.